Good morning, everyone, and welcome to the EFINA webinar on the FinTech landscape in Nigeria. Thank you very much for joining today. Welcome, everyone, and thank you for joining us. Thank you for joining us. Thank you very much for joining us today. And we will be using this opportunity to go through some of the key findings in EFINA's FinTech survey that was released towards the end of last year. I'd just like to go through today's agenda. This entire production should take just 1 hour. The first thing that we'll go through is just to do a quick introduction on EFINA as a company, on myself, Dayo Ademola, who will be speaking with you today, and on the webinar objectives and modus operandi, just to basically have our way of operating today as we go through this. Then I'll take you through the Nigerian FinTech landscape. We've budgeted about 30 minutes. It may take a little less. And then after this, we can go through some questions and answers and give the closing remarks. Just a little bit of background about myself. My name is Dayo Ademola, and I currently head the Innovation Fund here at EFINA. I joined EFINA in December 2018. My previous experience is in financial services and technology, and I've previously held roles in Union Bank, Main One, amongst others. The Innovation Fund here at EFINA invests in startups and growth stage fintechs with an aim to boost financial inclusion in Nigeria. And more importantly, to give you some background about EFINA, EFINA is enhancing financial innovation and access. It is a financial sector development organization that's about a decade old in Nigeria, with the main objective of promoting financial inclusion. We are currently funded by the UK government's Department for International Development and by the Bill and Melinda Gates Foundation. So here are a couple of the objectives of having this webinar. It's basically to give everyone an overview of the global FinTech landscape and key lessons for Nigeria. So basically what we're trying to do here is take a survey and a study of the FinTech landscape globally and apply that to Nigeria to give us some lessons learned and a roadmap forward for how we can fully develop the FinTech space in Nigeria. To do this, an analysis of the different stakeholders in the Nigerian FinTech ecosystem was done, and this will be shared in today's webinar. We'll also be taking a look at the different subsectors in the space, the types of technologies FinTechs use, and how these technologies enable financial inclusion. And lastly, we'll also be looking at the trends, challenges, and recommendations for all the stakeholders in the Nigerian FinTech landscape. So now I will just go through our webinar modus operandi. This is just to let you know how we plan to operate today. We will begin with an overview of the report before going into a review of the global FinTech landscape. Following this, we will then go into a deep dive of the current Nigerian landscape as of December 2018. Afterwards, you'll be able to ask me questions through the Q&A feature on the Zoom app. And out of respect for everyone's time, we'll be taking just 5 questions. We get all your questions. We will also respond to all your questions in a comprehensive blog post that will be shared after the webinar. So thank you again for joining, and let's dive right in. As I mentioned before, we're going to be looking at an overview and lessons learned from the global FinTech landscape and Nigerian FinTech landscape, brought to you by EFINA, which is enhancing financial innovation and access. This report was done with one of our partners, BCG, the Boston Consulting Group, and it was done leveraging their FinTech Tower, which does a scan of the global FinTech landscape, and they also helped us carry out the research that was done in Nigeria. And as I mentioned before, EFINA is funded by the by UK Aid and by the Bill and Melinda Gates Foundation. So let me just take you through a quick executive summary of what we'll be going through today. Up till date, and again, this is just a reminder that this report was released in December 2018, and we plan on doing an annual refresh of this report just to make sure the information stays as fresh as possible. So as of December 2018, over $100 billion had been invested in fintechs globally. About 50% of this was in digital banking, which is one of 4 key fintech segments. And if you look at the Nigerian fintech space, this makes a lot of sense because banks have the biggest wallets and they've been at the forefront somewhat of developing fintech for their uses in Nigeria, and this is a trend that is seen globally. They all leverage 4 emerging technologies, which are API, which is application programming interface, AI, which is artificial intelligence, DLT, which is distributed ledger technology, the most common application of which is blockchain, and biometrics. 4 key success factors for the international fintech companies include innovation, product innovation. Again, this is important because the products there must be product market fit, and the products have to fit in with what the market needs and what will help move the market forward. Strategic partnerships. This also helps to, take forward the old adage of 2 heads are better than 1. So with strategic partnerships, fintechs are able to leverage knowledge, leverage funding from multiple partners to build the best possible products to solve the most important issues at hand. The third success factor is a physical digital mix. Again, this is particularly relevant in Nigeria because while all of these solutions are being built on a digital platform, they, at the end of the day, have to interact with real people, with real human beings. So there has to be some sort of physical interaction in the product delivery. And getting that mix correct is one of the key success factors for fintechs. Another one is the lowering barriers to service. And this is where engaging with all the stakeholders in the ecosystem, including regulators, operators, even media around what fintech is doing, helps to lower the barriers to service and means there could be more entrants into the space and therefore solve more problems. Looking directly at the Nigerian fintech ecosystem, by our estimation, there are about 210 to 250 fintechs, registered fintechs in Nigeria, 3 major stakeholders, 4 enablers and funding partners who have invested over $250 million since 2014. And most of the fintechs we have surveyed leverage API technology. We'll go into more detail about this later. Some of the trends: increased lending and savings players, banking partnerships, telco competition, and more innovation. Some of the gaps: funding, regulation, information, strategic partnerships, and corporate governance. We'll go into this a little bit more later in the conversation. 4 major ways identified to improve financial innovation through the fintech space: more involvement from banks, increasing microcredit access, enacting effective regulation, and more innovative yet simple solutions. As previously mentioned, the agenda will cover first the global fintech landscape and lessons learned, and take this down into the Nigerian fintech landscape. So first, let's start with the global view. Key takeaways. As previously mentioned, globally, we've seen about $100 billion in investment in fintechs. We did see a trend of funding increasing in 2015 due to the lending segment, which really grew in 2015. However, in 2016, there was a dip as investors were more cautious. This ebb and flow is a trend that you typically see in any new industry and any new space globally. You first have a rush of people with a huge mass of investment. And then as lessons learned and a few people get burnt, people get a bit more cautious, investors get a bit more cautious, and then we're able to reach a steady state of growth, which you can see as the market recovered in 2018 due to investments in payments, which is another huge space. Again, we'll go into more detail about this. The global fintech space broadly falls into 4 key segments and 9 clusters. The largest cluster being the digital retail payments and digital banking, respectively. 4 key emerging technologies we already covered this. So API, AI, DLT, and biometrics, and the success factors that we mentioned in the earlier slide. So slide 12 just basically gives you a breakdown of one of the headlines that we mentioned earlier, which is that there's been about $100 billion in investment in fintech. And this has largely been around digital banking, leveraging 4 key technologies. So if you look at the chart on your left, which outlines the fintech market segment, you can see the largest portion, about 57.8 billion, has been invested in digital banking. The rest of the funding is divided amongst digital wealth management, which is the next largest, followed by corporate and SME payments, insurtech, and a host of others as well. This investments in the market segments are broken down into 4 major technologies, which are AI, distributed ledgers, API, and biometrics. And then we have a small segment that covers other. The largest cut of the types of technology that is leveraged in these market segments, as we mentioned before, is artificial intelligence. Excuse me. So, just some overall themes. The largest market theme is digital banking. More important technology, the most important technological segment is artificial intelligence. And most relevant segments for financial inclusion, and this is particularly important, especially here in Nigeria, are digital banking, technological segments, distributed ledgers, APIs, and biometrics. Again, this is a recurring theme that will go through this entire presentation, particularly because in Nigeria, we're largely focused on financial inclusion. The next slide basically takes us through the investment trends over the last 5 years, looking at 2013 to H1 2018, looking at which is the first half of 2018. So we basically saw growth between 2013 to 2015. As mentioned before, there was quite a significant spike in 2015 from 17 billion in the prior year to 26 billion. And then we saw a little bit of a dip in 2016 and a major dip in 2017, down to 19 billion from 26 billion in 2015. But this, in just the first half of 2018, grew back up to 25 billion. Again, we'll do a refresh of this presentation to basically look at what was the total investment in 2018 and what the trends for 2019 are looking like. As mentioned before, there was a big boom in 2015 because the largest growing segment in fintech was lending. Investors became a bit more cautious in the following years. And like I said, we saw a spike. We've seen a spike in 2018. This is largely due to a huge investment in payments, and some Asia Pacific giants such as Ant Financial actually made a huge investment in 2018, which is one of the reasons why this number is so high. The other thing that you can take away from this slide is to look at the geographies in which these investments have largely been happening. So we see the Americas, so North and South America, APAC, which is Asia Pacific and covers Asia, New Zealand and Australia, and Europe, Middle East and Africa. So the largest, especially in 2018, the largest geography that saw investments was APAC, was Asia Pacific, as we previously mentioned. So on the next slide, we're looking at the 9 key clusters in fintech. And these clusters are divided amongst the key market segments, right? So digital banking, which is a key segment that we mentioned before, entails 3 clusters, which are the digital retail payments, payments infrastructure, and lending. You can see some of the cumulative equity funding numbers in those segments. As previously mentioned, payments is the largest portion. So collectively, between digital retail payments and payments infrastructure, there's been about 32 billion invested. So the next thing you can look at as well are the, excuse me, are the growth rates between 2017 and 2018. There was an 81% growth rate in investments in digital retail payments between 2017 and 18, which again explains the quite the huge spike that we saw. And correspondingly, there was a 53% decline in investments in the lending segment, which again, as we previously mentioned, there was a bit of a slowdown in investments in that space. So the key drivers for these particular clusters, so new categories such as P2P, mobile wallets, cashless. For payments infrastructure, people looking at cryptocurrencies, P2P and B2C payments, and lending largely leveraging digital connectivity and analysis, basically to offer alternatives for credit. There are some key player examples that we've put there that you can look at. But across digital banking, the main and most relevant technology that was used is distributed ledger technology, so DLT. The most common application of which is blockchain. Now going into the next market segment, which is the corporate and SME payments. The main clusters there are SME payments and corporate payments. And collectively, there was about $3 billion in investment between 2017 and 2018. This also saw about a 25% increase in investment growth between 2017 and 2018. The main technologies being DLT and artificial intelligence. And the main thing that we're looking at here is basically looking at the digitization of manual processes, as well as technology-enabled solutions for an underserved market, which specifically speaks to SMEs. The next market segment we're looking at is InsurTech, and the main clusters are life and personal insurance and claims and benefit handling. Overall, in the fintech space, this is a fairly small portion of the investments we're seeing going into this area, collectively about $600 million, which is less than $1 billion. But this, however, still saw a huge growth between 2017 and 2018, 269%, particularly between 17 and 18. And for InsurTech, the main thing that's being done here is the digitization of manual processes and technology enabling that. Lastly, we look at the digital wealth management segment, and the main clusters here are digital investment management and retail trading platforms. Collectively, this saw about a $5.5 billion investment in 2017 and 2018 and grew over 30% in both categories. Main technology being leveraged here is API, and the key drivers for this are generational wealth transfer to tech-enabled clients, as well as the democratization of capital markets and trading activities. As a lot of you may well know, there are several apps today that you can use to basically trade globally in capital markets. And this sort of opening access to all of this is what has seen the main investments in retail trading platforms. So moving on to slide 15, we are able to look at the four main technologies. Again, covered this before, so DLT, AI, API, and biometrics. For DLTs, we basically have seen that there are about 700 firms globally that are using distributed ledgers with a collective investment of about $10.9 billion. Several use cases, so there's Settle, there's Circle, there's R3. For example, fintechs leveraging the technology, digital retail payments, investment, and trading infrastructure. So basically, if you collectively look at slides 14 and slide 15, this basically just helps us build a matrix that covers the main clusters and the main technologies that are being used. And we've also been able to give some specific use cases, which anybody who's interested can research a little bit more and basically understand how these technologies are being utilized. So I'll just quickly go through the rest. So in artificial intelligence, we've seen there are over 600 firms globally with about $50 billion in investments. For API, there's about 300 300 firms globally with about $5 billion in investments. And biometrics, which is an ever-growing area and is also particularly relevant for financial inclusion. We're seeing about 80 firms globally with less than $1 billion in investments. We are very specifically interested in biometrics because one of the barriers to financial inclusion, particularly in Nigeria, is being able to adequately identify the people who are included. So biometrics helps with this, enabling authentication, identification, as well as security of people's data. Slide 16 basically covers global case studies revealing distinct key success factors tailored to local contexts, which is also what we're doing here with this particular research. Basically looking globally, what has worked, what hasn't worked. And the main thing that we have seen is specifically the things that have worked is when we take technologies, when we take use cases, and we tailor them specifically to local contexts. 4 key success factors identified throughout all of the case studies are the leveraging of strategic partnerships, key distributor, and this covers key distributor partners. So if you have the technology, if you have the products that you want to get out there, partnering with organizations that can actually get you cover the last mile to get to the customers is very, very important in being able to scale these products. The other thing as well is being able to create strategic partnerships with client access partners, which again is speaking to covering the last mile. And also funding. Funding is also very important, and because funding is required to be able to scale any fintech. And this is also one of the ways that EFINA is getting involved in the ecosystem, particularly in Nigeria. The next thing that's important is the product technology innovation. The most important factor here being the risk management ability. So you must be able to manage your risk. This is particularly important as you're scaling any products, particularly also important as you're looking to include previously excluded people into the financial system. We must be able to manage our risks properly when doing this. Third thing being the physical digital mix. Again, mentioned earlier, this is important, particularly in markets like Nigeria, where while you may have a fantastic digital product, a fantastic technology product, you must be able to get to the customer directly. And this, in most cases, will require some sort of physical interface. And also lowering barriers to service, particularly for the users, to make sure that users are able to interact with these products to serve their needs. So now, after looking at the global fintech landscape, we're now going to look specifically at the Nigerian fintech landscape and see what lessons we can learn from taking a global view. So slide 19, I think, is the most important for this particular section. I'll just go into more detail about each one of these buckets later, but the key messages for this, the first one being the fintech ecosystem comprises of fintechs, 3 stakeholders, 4 enablers, and funding partners. We'll go into more detail with this a little bit later. We've also seen that between 2014 and 2018, the equity and grant financing by funding partners grew by 53% to 87 million. This is significant, but a lot more funding is going to be required to truly scale the fintech ecosystem in Nigeria. 80% of the fintech ecosystem in Nigeria is made up of digital retail payments, which is 36%, lending, 25%, and payment infrastructure firms, which is 19%. In Nigeria, same thing as we've seen globally, API is the most dominant technology in the market. So current market trends include increases in lending and savings players. Now, anybody who follows the fintech space in Nigeria would not be surprised by this. And the reason for this, I think, is also because these 2 areas, lending and savings, are the lowest hanging fruit for pulling people into the financial services space in Nigeria. Other trends also include partnerships with banks, which again is very important because the banks have the infrastructure and the reach to be able to scale very quickly. So these partnerships are particularly important. Competition from telcos. So we know that telcos are going to be entering the space very soon. And also improving technological innovation is another trend that we have seen. However, even with these trends, there are a few gaps. The major one being access to funding. So while we have seen a 53% increase in the 4 years spanning 2014 to 2018 to 87 million, this still can grow much more significantly. And I do believe that if we look at the numbers for full year 2018, as well as the first half of 2019, which we will just be concluding in a matter of weeks, we will see that these numbers should grow even more significantly because there was a lot of investment in this space over that time period. Another gap is appropriate regulation. And we know that the Nigerian regulators are doing a lot of work to be able to very quickly, adequately regulate the space to also ensure growth, because again, financial inclusion is everyone's top priority. Adequate information is another gap. Establishing strategic partnerships. So earlier on, we noted that the establishment of strategic partnerships is one of the most important factors for success for Nigerian FinTechs. But we've also seen that there has been some difficulty in establishing these partnerships. Corporate governance limitations and intellectual property rights are the last two major gaps that we've seen in the space. So 4 ways we have seen to improve financial inclusion through the FinTech space include involvement for more banks, increasing microcredit access, enacting effective regulation, and more innovative yet simple products. We will jump some more into this in the subsequent slides. So slide 20 just looks at the Nigerian FinTech ecosystem and what it will take, and basically looking at the framework for how the system exists today. And if you look in the outer circle, you'll see that the outer ring basically talks about research, and then we go down into technology and incubators before finally reaching the consumer. So if you look at this entire framework, you will see that the main objective of all of this is to enhance and optimize the space so that the consumer is adequately served. So the stakeholders, we have our regulators, we have CBN, you have the central switch, which is NIBS, you have people like the FinTech Association of Nigeria, and the government as a whole. Other stakeholders, you have banks, and we all know the 24 banks in Nigeria. We also have the telcos, which are also major stakeholders because the majority of these products are brought into the customer via mobile phone technology. And in the center, you have the FinTech operators, and we've put some samples of FinTech operators there. People like Paga, like Flutterwave, Cellulant, Bankly, and others. And then covering all of this are the investors. Now the investors, money is what greases the wheels. Money is what is required for the innovation, for the development, and for the scaling of all of these FinTechs. So in slide 21, we basically take a look at the funding in Nigeria over the last 5 years, looking at 2014 to 2018. And cumulatively, that funding is in the range of $250 million, with a 53% growth between 2014 and 2018, from 16 million to 87 million US dollars. The key drivers of this growth has been the financial inclusion drive with the set by the CBN of 80% by 2020, increasing smartphone penetration, with That's getting to 20%. With that getting to 20% currently, a surge in e-commerce activity in Nigeria, government intervention establishing innovation hubs across Nigeria, and regulatory impact from the introduction of the Payment Services Initiative as well. So these are some of the key factors that have led to the growth of fintech investments in Nigeria. So, and on slide 22, we just look at a bit of a breakdown of the top 8 funded firms in Nigeria as of year end 2018. In that period, Cellulant absorbed 20% of total funding in Nigeria, while API is a dominant technology among the top 8 funded fintech firms. So here you can see a breakdown of who these firms are and how much was invested over that period of time, and who some of these competitors are. Anybody who's familiar with the fintech ecosystem in Nigeria, a lot of these names must be very familiar to you. More interesting are the main clusters that these guys represent, which look at payment infrastructure, which is the main one. Lending is the second most common. And then we look at digital retail payments and savings. As previously mentioned, the dominant technology is API, as well as AI being utilized. We can also take a look at who some of the investors in the space are. You have people like the Rise Fund and Endeavor. You have your Media Network, you have Stripe. So there's a wide plethora of people who are investing in the space today. And this is just actually a small sample of them. You also have people like EFINA, us here at EFINA, who are focusing on grant funding to also help push this ecosystem forward. So there are 2 major types of funding leveraged by Nigerian FinTech. There is equity, which is dominated largely by international investors. And as of the time of this report, out of the 87 million that had been invested in 2018, as of Q3 2018, 86.7 million of those funds came from equity investments, largely dominated by international investors. These target investments are targeted at a few early traction and growth stage fintechs. The second type of funding, largely leveraged, is grant funding. This is dominated by local and state investors. They invest small sums of money. At the point of this report, as of Q3 2018, it's basically accumulated to about $200,000. And the target investment is proof of concept at early traction fintechs. This would be a good opportunity for us to talk about the $2 million EFINA FinTech Fund that was launched at the end of March 2019. So this is why it's not included in this report. And this funding was targeted at both startup and growth stage fintechs. And one of the main things that we are also looking to do is to leverage the entire ecosystem to move the fintech space forward and to ensure that we are doing the most that we possibly can to reach our financial inclusion goals. So as I mentioned at the beginning of the presentation, Nigeria is currently home to 210 to 250 fintech companies. 60% of these address payments and lending clusters. So again, digital retail payments and lending, 2 largest clusters in Nigeria, looking at about 60% of all the fintech companies that we have. The next that we look at is payment infrastructure, which is about 19%. And then you have savings, which is about 8%, and digital retail trading, which is about 8%. And then you have a small percentage, about 4% of all the others who cover insurtech, corporate and SME payments. Same trends we saw globally, we see in Nigeria. API is the most dominant technology, followed by AI, DLT, and biometrics. This is in terms of funding and the number of fintechs in Nigeria. The total number of firms in each of these spaces is based on cumulative equity and funding based on applicant funding. And for API technology, we see about 98 firms who have garnered a total of $56 million in funding. The top use cases for API is the aggregation of financial functionalities, which basically just means pulling all the different financial services that a customer might use into one particular space. And we also look at banking platforms, which also utilize API, as well as trading infrastructure. API, again, is very common because it also helps with the integration of fintechs to other strategic partnerships. And as we mentioned before, strategic partnerships is one of the most important and key success factors for fintech. And API is an avenue for this to happen. So it basically gives a way for all these technologies to connect to each other and to give the best possible product to the end consumer. The next most popular technology is artificial intelligence. Here we see there are about 38 firms in Nigeria who have pulled a total of $28 million in funding. And this again seeks to increase use personalization, credit scoring, and risk assessment in largely in lending fintechs. The third most common is distributed ledgers. Again, as I mentioned before, the most common use case for this is blockchain. And here we're looking at digital retail payments, investments, and trading infrastructure. And then last, we have biometrics, of which we see about 21 firms in Nigeria, with about $18 million in funding having been invested so far. And this looks to increase authentication, identity, and security in the fintech space. So there are three types of accelerators, which play a significant role in developing and growing the fintech ecosystem, especially looking at startups and strategic partners. So you have the independent accelerator, people like Microtraction, and here you're able to see what their focus is, which is in payments, lending, cryptocurrency, payment infrastructure, and trading. And you're able to see some of the fintechs that have successfully been accelerated by Microtraction, which is an example, and who some of their strategic partners are. So you see some of the international partners here coming in, so people like Y Combinator, Google, 500 Startups, Pave Investments, Launchpad, etc. You also have the corporate accelerators. So you have several banks have come up with their own accelerators. These include EcoBank, Union Bank, Access Bank, amongst others. And their focus is in payments, lending, security, cryptocurrency, big data, and trading. Again, by helping to accelerate fintechs, these banks are also able to expand their own products and services to their customers, and they're able to innovate and scale much more quickly. Here, you're also able to see who some of the alumni fintechs are that have gone through some of these corporate accelerators, as well as who the strategic partners are. And then lastly, you have the Entrepreneur Hub. CC Hub is a very good example for this. And so their main focus is on smart infrastructure, governance, health and well-being, digital security, and educating. And you're able to see who some of their alumni and strategic partners are. Co-Creation Hub is also one of EFINA's partners in rolling out the $2 million fintech fund that I mentioned before. We currently have our startup grantees going through and a customized acceleration program at CC Hub. This is particularly important because this gives these startups the best possible chance for success and helping them to scale their businesses rapidly. We've also seen that universities need to complement efforts of specialized training centers to close widening skills gaps. Any fintech entrepreneur that you talk to in Nigeria will very quickly let you know how difficult it is sometimes to find skilled personnel to be able to work in their businesses. And you have some training centers that are looking to close this gap. And we've also noticed that more work needs to be done with universities and other partner incubators to be able to get this done quickly. So 5 key trends observed in the Nigerian fintech market. We covered this a little bit earlier. There's been a surge in lending and savings players over the last couple of years. There's been an increase in partnerships with banks. We've also seen some competition from telco providers, and this is likely to increase going forward with some of the new licenses that are likely to be issued or that are being reviewed by the CBN currently. Technological innovation as well. More innovative solutions are being introduced, and a widening skills gap, which I have just covered, and which is another focus that really needs to be taken into consideration, because the more we're going to need to be able to scale up very quickly, and we need skilled technicians to be able to do this with fintechs in Nigeria. And then there are some key limitations that the ecosystem is currently facing. Appropriate regulation being the first one, and there's a lot of work being done, a lot of capacity building and stakeholder management that's being done across board with the regulators and with operators to get this moving as fast as possible and in the best way possible, so we create the most enabling environment possible for fintechs. Access to funding. Again, this is one of the reasons why EFINA entered this space, because funding is extremely key to be able to grow the ecosystem. Information adequacy, so lack of an established database to leverage and provide supplementary information. And I'm sure everybody out there has heard the phrase that data is king. Having the right data to be able to know what's going on in the ecosystem is extremely important. And again, looking at these limitations, you can see that with the first 3 limitations we have mentioned, EFINA is looking to intervene in this space. Information inadequacy is one of the reasons why we have conducted this research, and we have it publicly available for everyone to help close this gap as well. So there are corporate governance limitations as well, and this is internal to the fintechs, but it's typical for any new industry or any startup. And what we have done for our startups in the EFINA FinTech Fund, for instance, our grantee startups, is the program that I mentioned before, the acceleration program that they're going through in CC Hub right now, ensures that corporate governance is one of the most important things that they are taught and they are exposed to. So intellectual property rights is also a limitation that's being faced. Intellectual property law complications to establish rights and patents is also something that needs to be addressed, as well as strategic partnerships, which I have mentioned before. Some key players in the Nigerian fintech market advocate financial inclusion and focus business on solving core issues. Again, this basically just comes from some of the stakeholder interviews that we conducted. And you can see here that financial inclusion and focus on having sustainable businesses is particularly important, and the operators and people and other stakeholders in the ecosystem are basically echoing this. So based on our research, we have seen that going forward, fintechs could support financial inclusion through 4 main axes in Nigeria. The first one is through more involvement from telcos and banks, which I think is self-explanatory. The next one is through increasing microcredit access, and we are seeing some movement in this space. We have seen a lot of new entrants into the microcredit space. This is particularly important because this gives small businesses and individuals the means to be able to scale their means of income when they have access to credit. Enacting regulation is also one of the ways fintechs could support financial inclusion. and more innovative but simple solutions. So at the end of the day, as I mentioned towards the beginning of this presentation, the product market fit is very, very, very important. So basically what that means is the product actually being useful and utilized by the end consumer is the most important thing. There's no point in creating this beautiful, innovative, complicated solution in a design lab somewhere that customers at the end of the day will not be able to use. And that basically brings us to the end of this presentation. As we previously mentioned, right now we would like to take some questions. So if you have any questions, please send them in and we will respond to them as we are able. So we'll take a very short break and come back in about 1 minute with answers to your question. Thank you. Okay, thank you very much. I'm looking at some of the questions here. So some of these questions are repeated. So we will look to answer 5 of these questions. And any questions that are not answered will be answered in detail in a blog post at a later time. So one of the first questions is, will the presentation slides get shared? Absolutely. We will share the link to where you can download the slides on the EFINA website immediately this webinar is over. So you'll definitely, the slides are actually already up, but we will be sure to share the link so that you can go and download it. Another question that I see here is, what is the, so another question I see here is, do you think from an investor's perspective, fintech ventures are getting very expensive given recent attention drawn towards them? So to answer this, I'm going to try to deduce what I think it is you mean from this question, which is it expensive for investors to invest? And the general answer I would say is no, because you're basically able to, particularly with startups, with smaller investments. So if you look at it, VC, venture capital firms, for instance, typically invest around $50,000 or less. And that's a relatively small ticket size that you can invest in excuse me, that you can invest in a fintech, and this will help to begin to scale that particular fintech. Of course, as the more a fintech grows, the more any business grows, investing and getting equity from this fintech, investing for equity in this fintech obviously will become more expensive because the company has become more valuable. So I hope that answers your question. Another question here, which is a common theme, is around PSBs. So I'll just read this particular question. When are the PSBs, this is from Abraham, when are the PSBs launching services? And what has been the reaction from the banking sector about potential competition? So the first part of your question, when they are launching services, we're all aware that they've applied for licenses and their licenses are currently being reviewed. And so when these licenses are approved, approvals are given in principles, that's when the services will be launching. And reaction from the banking sector, really at the end of the day, the biggest concern is financial inclusion. And with a bankable population of over 150 million Nigerians, there's more than enough to go around. A very interesting question I have here, which is the second to last question that I'll respond to, says with most fintech equity funding coming from outside the country, how do we improve the participation of local investors? So the big question here basically is, I think one of the main ways to improve the participation of local investors is through education and awareness building. Because if you look at your typical investor vehicles in Nigeria, capital at risk is not necessarily one of the favorite investor vehicles in Nigeria. But the reason why there's a lot of funding coming from international investors is because the fintech ecosystem internationally is a lot more developed and there's a lot more understanding around the risk and reward framework of investing in startups internationally. So I think one of the things that we can do is to improve the education of potential investors here in Nigeria to let them know that this is a good avenue, or this is potentially a good avenue for investment. And I know there are a few bodies who are looking to improve this education currently, including some of the regulators and people like the Nigerian Stock Exchange. And the last question that we'll answer here on this webinar is a very frequent question that I personally get, which is, how do I get funding for my fintech startup? So one of the main ways is just do your research, right? So there are a lot of grants, there's a lot of grant funding currently available. EFINA is an example of this, even though we've closed our inaugural fund. There will likely be more in the future. Do your research and be able to get as much face time with potential investors as you possibly can. There are a lot of events and aggregator events that happen in Nigeria these days where you can get face time with potential investors, where you can go to learn as much as you possibly can. And that's basically the main advice. You have to basically do your research, hit the streets, talk to as many people as possible, develop your idea as much as you possibly can, be as knowledgeable as you possibly can, so that every single time you have a conversation, you're able to put your best foot forward. And that's basically the best advice I can give. It takes a lot of legwork and it takes a lot of research. So thank you very much for joining us on this webinar. Please know that we have taken note of every single question that was asked, and all of these questions will be responded to in due course. And one of the main things that we will do immediately following this is on all our social media handles, on our Twitter handle, we will tweet out a link that you can use to download the presentation that was given today. Thank you very much, and I look forward to engaging with you further in the near future. Have a good day and the rest of your week.